Hey, good morning, everybody. Welcome to another day Market Report brought to you by Mike Bjork. Happy Monday to you all. Hope you guys had a wonderful weekend here. Today is Monday, July 28th. We got this week is going to be a chock full of economic news data. So today's probably the lightest of the days, and that's the pending home sales for the month of June. So back in May, we had went up 6.1%. And actually in June it decreased. So as a result, the stock market came down a little bit on those type of numbers. Also, there were some earnings reports that were being released, and of course some M&A acquisitions from our own Zillow acquiring Trulia. So a pretty big purchase there in our real estate market here. So obviously that affects how some of us in the real estate industry are work. So, anyways, let's go ahead and take a look at the bond market. And right now, the bond market is up. So we are having a nice little rally today. So with the stock market pulling up, we're getting a nice little pull and improvement in our interest rates, pricing for interest rates. So this week, be prepared. We got the FOMC this week. There could be a couple statements in it that could really roil the markets. So there could be comments that, as we know, the bond purchases are going to be wrapping up around October, but there's going to be questions as to is when are they going to wrap up the reinvestment. So what was happening is when these maturity dates were coming in the current bonds that they had, they're reinvesting that money back into purchasing it more of those. So not only were they buying 35 billion a month, but they were also, or I'm sorry, not 35, it was like 85 billion a month. They were also reinvesting any of the maturities back into it. So there's even actually a greater amount of acquisitions than probably what's on the surface there. So once they stop that, that's going to be questionable. We got jobs numbers coming out later this week. The unemployment coming out. We got GDP coming out on, I believe it's out either Wednesday or Thursday. That's going to be huge. This will be the first initial one, but again, if there's anything that could really surprise them, be sure that the markets could react to it. They could be looking for reasons for reaction, as a lot of people believe that they are in an overbought position as it is. So they could be looking for reasons to start pulling out, and that could be beneficial for our interest rate, especially here in California, and with the trends that we could get a nice little improvement over time here with the correction in the stock market. So be prepared for a very volatile week this week. It could go the other way, so you have to be careful. All right, folks, you guys have a wonderful week. Look forward to talking to you guys soon, and look tomorrow we'll start the first day of the FOMC, and then a bit more economic news release is scheduled. All right, have a wonderful day. Thanks for watching.